See, the entity shall apply Ind AS 116, which is a new Ind AS, for period starting from 1/4/2019. Before that, you had some other Ind ASs, which was not talking about this ROU asset. Now, there is one practical expedient given, the third practical expedient we are coming in this standard. It says that the entity can elect not to reassess the contracts to check whether it contains the lease or not, and can continue with as it is, whatever they have been doing it earlier. But if they opt this, they have to do it for all contracts and not lease by lease basis. They said, look, from 1st of April 2019, if you enter into new contract, no choice for you. You have to do 116. But you might have done certain contracts 20 years back, 15 years back, 10 years back. The moment I tell move into 116, you will start shouting now. So should we do our business, or should we go back to 1980 and figure out what was the interest rate at that time? Because I've been using it, like China will shout now. Sir, for the past 89 years I've been using it. Only 10 more years are left now. Followed, no? But in principle they are using it like an asset only. That's what, okay. Since you are the first timers, I'll give an expedient to you. If you want, you continue with your existing for all the contracts before that. 1st April, no choice. Now, but if you want to do that, do it on all contracts. Don't tell that, so this is beneficial, sir, I will do it ROU, and this is not beneficial, I will not do ROU. No, that is not permitted. If opt to apply 116, then the transition provisions will be as below. So they have given you two options in that also. One is called a full retrospective approach. That means go back. Originally, whenever, 80 years back, 100 years back, you left to you, when you took the lease. If this contract, you would have treated at that time as per 116 on that day, 10 years back. What would have been its effect? You bring that effect right now. That is called a full retrospective approach, which I don't think so anybody will move. Too much of headache is there. If you don't want that, then I'll give you modified retrospective approach. There also I'll give you alternative 1 and 2. See, in this case, I need to prepare a third balance sheet, because my opening balance of previous year is going to change now. Its adjustment is going to happen. We'll discuss that third balance sheet. Now, under full retrospective approach, 116 is applied as if it is the inception of all lease contract. Lease liability is discounted commencement date of the lease, 1990. Say, for example, 1991 lease contract started. Today we are in 2023. They say that if you opt for this, one option is don't touch that. Whatever you have been doing, you continue doing it. Whatever standard, Ind AS or whatever. Otherwise, if you want to touch, you go to 1990, take that lease interest at that time, implicit rate. From then you start discounting it. And your last year period comparative, because generally when you prepare, say 2019-20, when you prepare, you will have a comparative 2018-19, and you will have a third balance sheet which is 1st April 2018. All the cumulative adjustment, what would have happened, you adjust in the open retained earnings. This concept we will learn more now in 101, opening retained earnings. Because cumulatively, whatever you are doing, ultimately it will sit where, Baba? Equity. Equity means what? Your retained earnings. Whether you have made a profit in the business, you have made a loss in the business. Ultimately, it will find the point there, no? And consolidation is this is the life. Huh? Other equity you need to understand. Otherwise, consolidation will not understand. You should know where it is moving, how it is moving. Now, also in this one, opening balance must be restated. Okay, what if, sir, if I adopt modified retrospective? Retrospective is there, but it is modified. Okay, then they say that, look, you might have the lease from 1990. You have to apply retrospectively with the cumulative effect recognized at the initial application. You don't need to prepare the opening balance sheet, third balance sheet, 1st April 2018, not required. You figure out, you do as if it is a normal, but the opening balance sheet, you need to apply it. The lease liability is discounted today's rate, not 1990 rate. But why I am telling retrospective? Because you go back from 1990 and using today's rate, you start discounting and all those things you do. And you see what is my ROU balance today and my lease liability today, and from then now on you go on. Restatement is also not required, and third balance sheet also not required. The difference is adjusted in the opening retained earnings of 1st April, not of the 1st April 2018. This year's balance, opening balance, it will be adjusted. Sir, is there any more option? Yes, there is one more option. It's called alternative to the lease liability, and I hope maximum people would have gone for this simple approach. Lease liability and ROU is measured based on what you should treat is, look, I am on 1st April today. Forget about 1990. From today, how many years are pending? 5 years or 10 years? Treat it as if it is a new contract. Don't go with the retrospective. I don't know why they are calling retrospective. This is retrospective, I agree. This is retrospective, I agree. Here actually it is the prospective, where you treat it today, remaining lease present value you find out based on today's rate. Opening restatement is also not required. You passed one accounting entry. If retained earning effect is nil, you pass an entry ROU to lease liability, as if it's the old 1990 contract, but you treat it as if today's contract. Are you very clear? Yes. So this is the accounting part. Let us solve one problem. Only one problem is there. It should be very much clear. So take out question number 24. A retailer who is a lessee entered into a 3-year lease retail from 1st of April 2017. One simple case they have given you. With a 3 annual lease payment of 2 lakh rupees when due on 2018, 19, 20. Now the lease is classified as an operating lease under Ind AS 17. Oh, previous Ind AS, which is now Ind AS 116 from 1st April 2019. So the retail initially applies Ind AS 116 for the first time starting from 1st April 2019. The incremental borrowing rate at the date of initial application is 10% now, and at the commencement was 12%. This 2017 is like 1990 in my example. That time it was 12%. The ROU is subject to SLM depreciation, we understand it. No practical expedients were elected. Which is practical expedients? Which practical expedients they are speaking? Means migration, transition. Not to do the transition. Continue with your 100 Ind AS 17 only. That they didn't adopt. Followed? No, there is other transition, other practical expedients also, which is that lease non-lease component breakup. That is all different. This practical expedient that he did not incur any direct cost and there was no lease incentive, there was no requirement of the lease to dismantle and remove the underlying. That means they have given it's a very plain scenario. What would be the impact of the lessee under following approach if you follow full retrospective approach versus if you go with the alternative 1 or alternative 2? Now, how it may come in the examination? They may ask you any one, or I don't know, they may ask you more also. What would be the impact of the lessee 116 under full retrospective they give? But how they will call alternative 1, they may not tell you. They say that modified retrospective when ROU asset is not equal to lease liability. Tell me which alternative it is, 1 or 2? 1. Because under the second alternative, your ROU is equal to lease liability. See how intelligently they will ask you this question. Or they may, full retrospective, they may decide to tell something else. So they decided to do this thing. Whatever, I don't know how they will give. They may give you not for 3 years, they may give you for 7 years. Show the impact of the with the journal entries. Okay, so write solution. 1 full retrospective, or A, full retrospective. One, we'll write a short theory. Discount rate will be of 1/4/2017 for ROU and lease liability. You have to measure, no? Then opening balance of 1/4/2018, third balance sheet, is restated with the impact to retained earnings. So Ind AS 101, once you do this, you understand it better. It's called a transition from the old accounting standard balance sheet into Ind AS balance sheet. A lot of adjustments will come. All the adjustment will finally hit your retained earnings. And the third, comparative. What is your comparative? 2018-19, because you are in 2019-20 financial year. Balance sheet is prepared on 31st March 2020 with Ind AS 116 is restated. So this is what you are going to do. Follow? So we'll write some theory what you are exactly going to do. So now as per this, first thing I want the present value of the lease liability. So write 1 lease liability. Can you tell me what is your lease liability? If you go for full retrospective approach, what is your lease liability? 2 lakh is the lease rent you need to pay. Is it having a variable component? Option, termination option, decommissioning, residual guarantee? No, there is only one component. How many years you are going to pay? 3 years. So I need a present value factor, annuity factor, present value annuity factor at 12%. Why? Full retrospective. That means I should go on the date of the lease contract for 3 years, which gives you 2 lakh into 2.4019 gives you 4,80,380. So with this, you will pass one accounting entry when 1st April 2017. What is the entry? ROU to lease liability. It was full retrospective, no? You understood? Next, we will prepare lease schedule. Naturally, for accounting purpose, what we would have done? All time what we would have done? Our step number 1 is to calculate the present value of the lease payment. Step number 2 is to prepare the lease liability schedule. Then ROU schedule, because I wanted the balances. So you write here 2018, 2019, 2020. Because it started on 1st April 2017. So is the end of the year. What I will write next column? Opening balance. What is my opening balance? 480, 380. Opening balance is 480, 380. Correct? Then what is the next column? Interest. If the payment was at the end of the beginning of the year, payment at the rate of 12%. So it comes to 57,646. CCF 2 lakh. And my balance, closing balance will be 3,38,026. Like this, I am going to prepare a lease schedule for next 3 years. So on the beginning, I would have had the balance of 3,38,726. If at all, I would have done lease accounting full retrospective. This is 1718. On 1st April 2018, this would have been the balance. And 1st April 2019, this is 31st March 2019. 1st April, I would have had this balance. And this is nothing but the present value of one lease payment. Now let us do an ROU asset. ROU asset schedule. Year 2018, 19, 20. What is the opening balance? Same 4,80,000, 380. What is my depreciation? 160, 126. 3 years. So closing balance will be 3,20,254. So your balance will get reduced. So now you know, if I have done full retrospective approach from the day 1 of this lease contract, on the date of transition, that is 1st April 2019, I would have got so many balances. But I should go in the full retrospective approach. I cannot touch this 1st April 19 balances. I have to go to 1st April 2018 balances, third balance sheet. and I have to adjust that third balance sheet. So now we will prepare one lease, fourth one, lease balance movement. One schedule we will prepare so that you will get a very clear understanding. Date. Since third balance sheet you need to prepare, I'm not interested before the, I'll not start from right from the beginning. Luckily here they give you 1/4/2017. If they would have given you 2012, you would not have gone. You are interested on 1/4/2018. Why? Because on this day adjustment is going to happen. What is your balance of ROU asset? 320, 254. On this day, the balance of ROU asset after 1 year depreciation would have been this. Because you started on 1st April 2017, 1 year depreciation would have come. What is your lease liability? 338,026. So first you are going to pass one accounting entry. ROU asset account debit to lease liability. When? 1st April 2018. Now the moment the amounts are different, you will get one difference. What you do? Retained earnings. So is there any interest? No. Is there any depreciation? No. Retained earnings? Yes. How much? 17,772. And now why did this difference came in the retained earnings? Because previously what you did till now, cumulatively, whenever you paid 2 lakh, what accounting entry you passed? As per Ind AS 17. What entry you passed as per Ind AS 17 whenever you paid 2 lakh? Paid, no. When you paid 2 lakh, what entry you passed as per Ind AS 17? Did this concept of ROU asset and all were there? No, it was an operating lease for you. What entry you passed? Lease rent expense account debit to bank. So your P&L got hit with, so because, and now what entry you passed? After this you treated as a lease rent. Go back to the liability schedule. You recognized the expense of 57 plus 1,61,26. How much expense would come now? Expense to bank. Bank is 2 lakh only, but your expenses are 2.17. So if you would have done on the previous day, your retained earnings balance would have been more or less. If this should have followed right from the day one, on 1st April 2018, retained earnings balance would have been more or less. It would have been less because your expenses would have been more. But you have been claiming less expenses, because of which your retained earnings balance is overstated. That's why you take a negative hit. Your accounting entry will be ROU, retained earnings to lease liability. On 1st April, followed, no? This difference of 1772 came because in 1718 you would have claimed, if at all, retrospectively you would have gone. First year, you would have claimed this much interest expense, this much depreciation expense, front load pattern, which would have been 2,17,772. But your reality, you actually claimed 2 lakh. Because of this, your retained earnings is overstated. Actual expense was more with the retrospective application. That's why you pass this entry. Followed? Yes. Now tell me, on 31st March 2019, what entry will come? What is the balance of ROU asset? 1,60,127. How come the balance of ROU asset got reduced? It is because of the depreciation, 1,60,127. Lease liability became 178,589. How did it become? Because there is one lease payment also, there is interest expense also, 40,6,563. So this is the restatement which is going to happen. Because if you look into the previous year P&L account, there is nothing called depreciation expense on ROU. But when you provide a comparative, should you not change? So your P&L of the last year is going to reshuffle now. Retained earnings is not going to come into picture. And the next year, your asset balance becomes 0 and you claim full finish. This is your current year, 1920. Have you understood? Yes, now we have to pass the journal entry. To pass this journal entry, we prepare this schedule. Otherwise, it's very difficult for us to grasp now what is the impact. Because our ultimate destiny is journal entry now. Now, can you tell me, students, first entry? Anyhow, we passed it. Okay, can you please pass the entries up to 31st March 2020? Students, please pause the video and pass the journal entries. We discussed it already. Up to 31st March 2020, you need to pass. Yes, now let us check the answers. So on 1st of April, you will pass the entry ROE asset account debit, retained earnings account debit to lease liability. Then on 31st March, interest expense 2000, this last year restatement, lease liability. See, now if you ask me, I would have credited lease expense, but the institute says bank. In MTP also said the same thing, because bank was correct now last year. Restatement is going to happen only for the lease expenses. Anyhow, you also go with what institute says and depreciation to ROS. Are you clear now what I am trying to do? It's the rectification entry. We are restating it. Last year, they passed one entry, lease expense account debit to bank. So what I need to do, lease expense I should restate it. Not bank. Bank is correct. Anyhow. Now 31st March 2020, interest expense, lease liability. This is correct. This is this year's entry. Previous years, okay, they are telling bank, do it bank only. What you have taken, lease expense. I told you, that's what I marked in red. Because I am also having a different opinion on that. Institute says is bank, leave it. No? Or you say bank bar lease expense, finish. Don't want to take the risk. Are you clear? Yes. So now we will go into the alternative one. How it is going to work, we will see. One, right? Modified retrospective alternative one. Lease liability and ROU is measured at a discount rate on 1/4/2019, 10%. Second, because of this, restatement of opening balance sheet and comparative not required. Third, difference is adjusted with retained earnings on 1/4/2019. You're not restating now, like full retrospective, you will go to 1/4/2018 and then you will adjust it. Here, since the alternative one, you will go to 1/4/2019 and take that difference to into retained earnings. Followed? Are you clear about this theory? So some theory will write, explain what we are going to do. Comparative is not restated. Cumulative impact of the differences will be adjusted with the retained earnings on 1/4/2019. What is the next thing I should do? Present value of lease payment. Can you tell me how much? Lease is 2 lakh only. Into 10% present value, I need to factor 2.4868. 4,97,360. Now, can you prepare that schedule, lease balance movement, and pass the journal entries? You have understood in principle? Or you want me to do it? If you want, I can do it. We already have the precedence now. What is that? Now what I should do next? After finding out the lease payment, what should I do next? What should I do? Lease liability schedule I should do. It will tally now, starting from 1/4/2017. Then ROE asset account balance schedule I should do. Then I will prepare that lease movement entry. Which date I'll start with? 1/4/2019, not like previous 18. On that day, what is my ROU balance and what is my lease liability balance? I will take from these two schedules. Differential figure I will take to ROU, what is that called? Retained earnings. And then last year one entry is going to come. Only 2 lines I have got in that lease liability movement. Then I'll pass the journal entry starting from 1st April 2019. I hope it's clear, students. Very clear to you. We can do it, no? Yes. So please pause the video and do this. Let us compare the answers. Yes, students. So we'll check the answers. Then you would have prepared a lease liability schedule like this, starting with the 4,97,360. And you prepared a 3-year schedule. Interest expense will be at the rate of 10%. And you got the balance on 1st of April 2019. Asset schedule you would have prepared and you would have got a balance of 1,65,787. Then you prepare the balance movement. You start with the 1/4/2019, 1,65,181. Difference is 16,019. How did you get this 16? 2-year interest, not required to be done here, just for your understanding. 2-year depreciation minus 2-year payments. Since it's the front upload, first year big amount of difference, small, second year small amount. Here you got constant. So that's why you got 16,000. Next year 18,194, 1,65,784. So you pass the entry ROE asset account debit, retained earnings account debit to lease liability. Did you get this number? Yes, what happened, Priji? Done. You pass the expense entry, lease liability to bank, no restatement, no opening balance, depreciation to ROE asset. Now we will move on to the most simple, called a modified retrospective approach 2, where ROU is equal to lease liability. Third one, the lease liability and ROU is measured here based on remaining lease payment with discount rate on 1/4/2019. No retained earnings is going to come into picture. No restatement and no impact on retained earnings. Neither cumulative, whatever it is not going to affect you. So in this case, it is very easier. I will find out the lease liability. What is lease liability? I have got only one payment to be done, 2 lakhs now pending, into 0.909, which is 1,81,280. Only one payment is pending now. Are you clear about this theory? Okay, I've given some shortcut. You can write this. Comparative is there, cumulative is not equal to, book ROE is equal to lease liability, so no impact. So cumulative, your present value of the lease payment is 1,81,820. So we will prepare one lease schedule. Lease schedule, what happens? You have got opening balance, because in exam they may give you 2 more years, 3 more years. So you have to say that my closing balance is 0. Similarly, ROU 2020, 181,820, 181,820, 0. So journal entry will be, okay, we can prepare that lease balance movement account, one schedule. Yes, students, I think you can do it. You prepare the same lease balance movement, only 2 line items. 1st April 2019, 181, 181, no impact on retained earnings. 31st March, 2 expenses are going to come. Then you will pass 2 journal entries, 3 journal entries on 1/4 and on 31st March. Yes, please pause the video and let us compare. Okay, so now our ROU balance movement will be like this. We have got only opening balances. Since both are matching, there is no retained earning effect. You have got only interest expense and depreciation expense. So on 1st of April 2019, you will pass ROU to lease liability. This movement is where ROU is set equal to lease liability. You understand, no? Approach 2. They may not tell approach 2. And 31st March, interest expense, lease liability to bank, depreciation to ROU asset. So now we will have some theoretical questions. Some 2 theoretical questions are there, probable question for the exam. Yes, we will discuss about 2 theory questions. Theory, okay? So you have to answer me now. You have understood theory very well. See, there are more number of questions which I have kept as a self-study. And there is something called a part 2. Okay, part 2 is the stage 2. After you, see, these theories are high priority theories for you. High probable exam questions. Then there are beautiful theory questions which can come for exam, which you have to study after you finish everything. Then self-study theories. Entity X is a utility company, enters into a contract for 20 years with entity Y, a power company, to purchase all the electricity produced by the new solar power station. So entity Y must have set up one solar plant. It generates the power. Now what it will do with this power? It will sell it to one utility company. Utility company may be a distribution company. Say this can be a real life situation. MESCOM is there. MESCOM is a distributor. Then one developer is there, like KEB is there, who is the producer of electricity. See, there are 3 things, no? Production, transmission, distribution. Like this, some arrangement is there. The solar power station is explicitly specified in the contract, and entity has got no substitution right. Why? Because today I have agreed to buy the power from you. Tomorrow you say, sir, no solar power, I will supply hydro power to you. Arey baba, cost is different, no? I will go for a toss here. Depending upon this, I have fixed some long-term contracts here. Since I am entering into 20-year contract with you, I have similarly entered into a 20-year contract with so many other customers. So I don't permit you to substitute that. Entity Y owns the solar power station and receive the tax credits related to the construction and the ownership of the solar. So whatever tax benefits are there related to the construction, Y is going to get. And entity X will receive the renewable energy credit because of the solar power station. Now, whether entity has the right to obtain substantially all the economic benefits from the solar station, is there a lease in this contract? You say, sir, it's normal purchase of solar power, no? Is there a lease? Understand, previously how I would have accounted this? I would have accounted as a purchase and sale of solar powers. Previously, I would have accounted as a purchase of a solar power. Lease question, people will wonder, what lease? Is it a lease contract? What type of contract it is? It is a contract to purchase, no? Where is the lease here? That's why Ind AS says, Baba, you may have entered anything there. I'm not concerned. You can write any language. Shakespeare's poem also you can write in that contract. I'm not concerned. Let me go to the substance. You could have purchased this solar plant outright, because now I will go into look into this. Can Y entity sell this solar power to anybody else? Who is getting all the primary product and substitute products? X is getting. It's as if he is your lesser, no. Instead of you setting up a power plant, you made somebody else to set up the power plant and you are taking it on a lease. And you are going to get all the economic benefits out of it. See, there is one MTP question on soap. Beautiful. If you have come across, I don't know. It is as if like, so I'm Nike. Let me talk about this example only, Apple. Do you think Apple, they manufacture their own products there? Nike shoes are there. Such a branded, such a costly shoes. Who is manufacturing? They outsourced it. This is an outsourced organization. In audit, you have got SA 402 applies there. Outsource, you totally outsource something out there. Now, when you outsource, then you have to look into, is it an outsourcing or it is a lease? Previously, now whether that company can sell it independently? No, Nike could not have permitted it. Otherwise, they will put the sticker of Nike and sell. No, it's the same product. What it makes? The brand makes the difference, no? Or the product makes the difference. Brand, why you are paying extra? What is brand? You are paying something extra, that is brand. You are not paying extra, it's a commodity. And brand comes out of your trust. Because people trust Nike. They don't know unknown company. So it may so happen that your purchase, you don't account it as a purchase, you account it as a lease. And the money what you paid for electricity, no, is not money for purchase of electricity, it's the lease rent you have paid. Understood? New modern way of accounting. Yes. Now let us see. They asked, do you have substantial economic rights? Now you explain. Look, 116 says that control the use of the identified asset. Customer should have the right to obtain all the economic benefits throughout the period. Now, what do you mean by economic benefits? Customer can obtain the economic benefits directly in many ways. Like you can use it, you can hold it, you can sublease it. And economic benefits include your primary output and the byproducts. Now, what is the primary output of this solar plus power plant? Electricity. That primary output who is taking? You are taking. Is that lesser stopping you from distributing this? You can use it. You can consume it yourself. You can give to somebody else. Thus, in the given case, entity has got that right of all the economic benefits for next 20 years because electricity produces the primary product and renewable energies are the byproducts of this. You see the interpretation. Although entity S is going to receive economic benefits in the form of tax credit, they are the benefits related to the ownership in legal form because you are legally, you are the owner. Rather than using of the asset, see, you get this benefit becoming the owner, not as a user. Your assets are used by somebody else as if it is their assets. So for you, it is a lease. Now you need to check whether it is a finance lease or an operating lease. In the finance lease, at the end of this, who is the owner of the solar power plant? If I continue, lesser, operating lease for you. Then you can't tell that, oh, I got 50 lakh rupees for sale of energy. No, Baba. You have to tell the word, look, I got 50 lakh as a lease rent. Do you see in substance how it will change your accounting? Understood? Yes. Now, why I give you this RTP question? Because there is one similar test your knowledge to question. And all other test your knowledge questions are somewhere knowledge questions, not exam oriented. Customer M enters into a 20-year contract with the energy supplier to install, maintain a solar plant. They designated, the M designed the solar power plant before it was constructed. That means it is predefined. You cannot use it for any purpose. But the question comes, who designed it? Customer designed it. Oh, that means who can operate it? Only customer can operate it. So as per the legal terms and condition, everything says that, okay, there is not a lease. But a question comes, who is going to use that asset? Who is going to get the benefit out of that? Who can operate that asset? If the customer, then there must be lease, no? M hired experts to solar energy to assist the determination of the location, equipment to be used, where it should be set up. Okay, they have got exclusive right to receive the energy produced. Nobody else you can take. Whether it can be said that you have got the right to control? Yes. You can call it by any name, but the nature of the solar plant and decisions such as how, where to produce, etc., if it is predefined, the question comes, who defined it? What type of output, like type of output, energy, production level is predefined in the question. And who defined it? The customer defined. Whether how much energy is to produce, that is not within your control. That is dependent upon the sunlight. That's why you must have designed it in such a way that your demands are fulfilled. Because your demand is only for 100 units, say for example. You will not set up one capacity for 5,000 units, no, because extra is best for you. So because M designed the solar plant, thereby predefined certain decisions, M is considered to have the right. Although regular maintenance, etc., solar plant increase the efficiency, it does not give the supplier right to direct. That's why M has got a control. So tomorrow you may say I have purchased, but it is a lease rent. Followed. Now going forward, please see part 2. I have given some of the question, all RTP, MTP question. If it was our old syllabus was continuing, we would have discussed. But I expect you to discuss it, no, to understand it. If you have any doubt, you can revert back to me. Very conceptual question, but not right now. Yes, so with this, we are complete with the standard. Just have a look at from time to time, no? We will have a reminder. Let us go back to what we started, because our focus is this, schedule 3. At the end of my FR class, schedule 3 should be very clear to you. Initially I started, you may not have known where the values are coming, how it is coming. Now every item, PP, are you very clear? ROS, are you very clear? Why it is coming behind it? Capital work in progress is also part of this. Chalo, other things we have not yet discussed, we will not talk about it right now. We will proceed further. Financial assets, what we discussed. Look at the items. By looking at, you know now, contractual rights. Oh, almost we finished then. 50% of the balance sheet is done. What else is there? We check no, deferred tax and all small thing. Followed, no? So like this we will take one by one and we'll solve it. Okay, now we'll move on to the next standard.